All right. Hey guys, Brad here. We are looking at gold futures. And the $1 million question is gold nearing a more lasting top? What is going on with the gold price? All right, we're going to dive into the chart. And here is something I want to make clear up front. If you're just looking for levels, I'm going to go through some levels real quick right now, just to give you guys the levels, because I know some of you guys aren't interested in the educational aspect. You just want to grab some levels. So I'm going to give you that value right up front here. Then I'm going to take some time to go into a more educational approach to the gold chart through the lens of Elliott wave theory. So here comes the levels. Now that's a daily chart, but you day trade scalper guys, I'm going to give you 3 levels right now. If you want a tight stop, well, I mean, an ultra tight stop is the most recent low from this morning, or was that this morning? Down there at 27.22. If you want to go long right now at 27.30, that gives you a roughly $8 stop. I mean, I know a lot of you guys can't handle an $8 stop, but if you can trade small enough, that's the key. Trade small enough, you can handle an $8 stop. You could go long. This is a trade idea and parameters. You go long here, put your stop below that last low. By the way, this is the December futures contract on the COMEX. That's your first parameter. The next, a slightly looser stop would be come down here at 27.0870. And then absolute line in the sand is I personally do not want to see below 26.8420, which is this low down here. By the way, these lines that I put on my charts, the numbers are over on the right-hand side. So I know some of you guys are on phones and tiny screens. So I mean, let me make this a little bigger for you here, hopefully. But what we are tracking is an Elliott wave, wave 4. If that is the low right here at 27.2210, that's the low, your target, actually the target for any of these is going to be 28.15. I think you could go more conservative with one fib less than that. I don't like that 27.88. I much prefer this higher level because of that ratio box. Now, I'll talk a little bit more about the ratio box at some point in time. But for right now, if you're in the Professor Trades Club, you see these boxes on my charts. Usually it's green, but this time I made it white because purple, because we're on this smaller degree. Okay, so parameters. I gave you that parameter. I gave you this second parameter here, 2708, and the third parameter for support is 2684. So I've given you 3 parameters to the downside there. And really, it's just one parameter to the upside, and is this zone up here, if you want to call it 28.15. 2618 fib up here is not an unusual fib. When waves 5 and 3 want to extend, that would be, in fact, this, I would expect this to extend. If that is really the bottom of wave 4, then that was quick, sharp, and did not burn any time off the clock, really. I mean, that didn't burn any time off the clock, this wave 4. So it is possible, though, because of where this terminated, it is possible that that is the low that goes with this expected high over here. So there, I've given you the parameters. You can stop watching the video if you don't want to learn how to fish and you just want me to give you some fish. Okay, I've just given you some fish. Now, part of the reason why I love the Professor Trades group is guys in there want to learn. They're open-minded. They want to learn. They're not just trying to run to the finish line. Taking your time. Size down. If you're new to trading, go small. Even if you're not new to trading, maybe you're not new to trading and you want to improve consistency. Size down. Learn how to use parameters that are based on structure. That is what Armando is all about. And maybe that's why when I found him on YouTube almost a year ago, it was like he was talking to me, because as an Elliott wave guy, I'm all about parameters and I'm all about Fibonacci levels. Armando is all about parameters and all about Fibonacci. So learn how to follow Armando. Learn how to make charts like Armando does, and learn how to borrow the mindset from Armando. That's what I've been doing for the last year, and has improved my consistency dramatically. Smaller size, better stops, because I don't want to make my stop based on some emotional level. I want to make my stops based on a structural level. Trade the structure, trade the fibs. All right. So I'm getting excited now because now I'm going to about ready to bust open some education on you guys. This is a daily gold chart. And the title of this video is going to be something about, is gold nearing a more lasting top? This low right here was exactly 1 year ago. And this high was back in the spring, April of 2023. So this Elliott wave chart has aged incredibly well. So as you know, inside of a wave 3, you want to see a 5-wave structure. And that's what we have now. We're already in wave 5 of 5. So, I mean, this being the 5th wave of 3, excuse me, the 5th wave of 3. So the reason I think this could be a more lasting top, by the way, you're looking at my ratio box again. Let me zoom in. I know a lot of you guys are on these small screens and tiny tablets. I apologize. I wish Elliott Wave were friendlier for smaller screens, but it's just not, because you need to see the whole structure. But here we are in this ratio box of this much larger degree wave 3 that is 1 year in the making. This is the area where we would expect to see a more lasting top. Well, Brad, you've already hit the box, so why don't I just go short, refinance the house and go short? Well, because we don't only look at a daily chart, we need to drill down and look at the lower degrees, and that's what I'm about to do after I zoom back out here and show you the idea being, once this top is struck, it is not unreasonable to look for a wave 4 that can take more time off the clock than the wave 2 took. If it's in a really big hurry, it is possible that it'll take less time off the clock than the wave 2. But I have a timing fib that I've been using. I don't post it on all my charts, but I'm getting much better at using this timing fib. I'm not going to talk too much about it, but a wave 4 can typically target the area of the wave 4 of 1 lesser degree. Let me say that again. Wave 4 can often target the region of the previous wave 4, which is of 1 less degree. So that makes sense for this wave 4 if it wants to come down here. And the real line in the sand, now this is a daily chart, so I shouldn't even spend much time on this for you guys, but you already know one of the rules is wave 4 may not encroach upon the price territory of wave 1 in order for it to remain a standard impulse. So it is going to, I'm going to be looking, whenever this tops, I'm going to be looking for this to come down in minimum of 3 waves. And depending on how big of a hurry it is, I think it's going to come down into this zone down here. But look, so what? Let's go back to the lower time frame so I can dial in what the substructure is doing. But just know that whenever this tops, let's look at the time of where I just put that there. You're talking like next summer. What? Are you saying, Brad, that gold might be in a multi-month long correction after this next high? Yes, that's what I'm saying. So let's go down to back to a 1-hour chart. And here, just so you now, let me just give you your perspective. So this is the top of that internal wave 3. This is the bottom of an internal wave 4. And this is the 5th wave of the larger degree wave 3 that I was just showing you on the daily chart. So the 5-wave move that we are looking for the top right now is going to be 5 of 5 of 3. I know that now that I've confused you, all you need to know is this next move up could be the last move, wave 5 of 5 of 3, before you get a multi-month correction. Okay, so now I've already talked about the levels, right? So I said there's going to be a more educational video. So now that I've explained why I think this region could produce a top that lasts for 3 to 6 months, let's go down and get into some educational aspects of Elliott wave. In particular, let's talk about how to use Elliott wave in your actual trading, because I know I'm fixated on the analysis, but I want to drop a little knowledge about how to trade Elliott wave. And one way to do it, it requires patience. And I rarely do it this way, but I'm going to show you right now. This is what you do if you want to be patient and you want to take a higher risk trade. Okay. This is not so much about a scalper as it is about trying to catch massive pips. And I'm a hybrid. I can scalp and I can catch massive pips. I can swing trade and I can scalp, especially since joining Armando's club. The reason I joined his club is I kind of straddle between scalping and swinging, and he got my head straight, really got my mindset right. So now I can do both, and I have like a variable mindset, and I'm aware of myself. Self-awareness is huge in trading. I, I I'd be remiss if I don't take this moment. Self-awareness is huge when it comes to trading. Know thyself. In all thy getting, get self-knowledge. I'm gonna let that one marinate for a second. Let's get back to the chart. So here is a way to trade Elliott wave if you want to be patient. In metals now, we know pullbacks don't typically do 618 to 886 like they do in crude oil. Sometimes silver does on the lower time frame. Silver is more volatile. Gold is volatile too, but in general, when gold is in the heart of a third wave, pullbacks are stingy and you get standard impulses. So what you want to do if you want to be patient, once you've been following my work inside of the Professor Trades Club and you think I'm looking for a bottom to be struck, but you don't just want to say, well, Brad thinks there's a low here, so I'm just going to go ahead and go long right here. No, because what if it just comes back and the real low is way over here? Then you got stopped out, and then it does the move that you were looking for. That happened over here. I know that happened to people over here. You got long. Maybe this is the bottom of wave 4. Then it came back down. Well, did it make a new? I'm going to put my stop right there. Bam, I got stopped out. Well, now it's coming back up again. Oh, it's coming back up. So I'm going to get long again. Then it came back down and stopped you out. So maybe you got stopped out 2 times, 3 times, and then it gave up this big move. So you don't want to play around with that level of minutia. You want something more safe, more secure. Now, this is a 1-hour chart. This is a 1-hour chart. If you want to catch massive pips, you don't need to go any lower than a 1-hour chart. Of course, I do just to dial it in, but you could literally trade Elliott wave on a 4-hour chart and a 1-hour chart if you're a swing trader. Think about that. So here we are on a 1-hour chart. Let this thing give you what looks like 5 waves up, and then wait for what you think is a 3-wave correction. But you want to get long gold, and I've done this before. I don't think I've ever posted this in the Professor Trades Club, but the other club where I learned how to do Elliott wave, I've been a member over there for over 5 years. I have actually posted trades like this, and here's the way to do it. So you put the fib tool. This is the fib retracement tool. Fib retracement tool gives you 2 clicks. First click goes on the swing low. Second click goes on the swing. This is the swing high, but I'm going to move the tool over here because what I want to do is see where that low that I've got labeled as wave 2. I want to see where that struck. Now I'm not using the magnet because I'm just doing this quick and dirty, but when I'm actually trading, I use the magnet because I want to know exactly where those fibs are. But just for the educational purposes, I'm not going to use a magnet. The typical area for a wave 2 in gold when it's in bull mode is anywhere between the 382 and the 618. Now, I know crude oil and the Professor, we're always talking about the 618 to the 886, but in metals, you often don't make it to the 618. It's stingy on the pullbacks when it's in full bull mode. So here is a wave 2. Now, the way you would think about this is it did not come down impulsively, meaning it didn't give you a clean 1, 2, and then a wave 3. It didn't. It kind of gave you maybe an A, and then maybe this is a B wave. Anyway, or maybe this was A, maybe this was B, and this was C. Now, sometimes I'll measure this. If I were if this were a live trade, what I do is I say, okay, Brad, so you were nice and patient, and maybe, look, I'm going to make myself crazy here, but I'm going to go down to the 21-minute chart because I want you guys to see the structure a little bit better. So I'm going down to a 21-minute chart, which means I need to redo this. Okay, so now I'm on a 21-minute chart, and you're trying to catch a swing, and you think this might be the low. You thought maybe this was the low, but you didn't get 5 up. You thought this, actually, let me stop right here. This is important. When I talk, I know I'm kind of stream of conscious. Maybe I'm babbling on, but I'm telling you how to trade Elliott wave. So maybe you want to take some notes. I'm going to give you a lot of information, but I want you to get it. I want you to get it. And if you have questions, drop them in the comments. I will reply. So here we are on a 21-minute chart. Maybe you thought the low was here, but what we're waiting on is 5 up and buy the retrace, which should be in 3 waves. We didn't get 5 up. This is not 5 up. Then you get a retrace. Is this 5 up? It's not big enough. That's why if you're swing trading, you need 5 up on an hourly chart. These little tiny nano stuff, it's great for scalping, but I'm not talking about scalping right now. I'm talking about how to use Elliott wave to catch massive pips. You got to be patient for that. Now, what I use it for is if Armando is putting out long trades for a scalp and it happens to coincide with what I think is a major support, like a major support of a wave 4, for example, or major support of a wave 2, for example, I'm going to leave a runner on looking for much higher. So this didn't give you 5 up. This didn't give you 5 up. This didn't give you 5 up. I mean, any of those long positions you took over here, you got stopped out over here. Then we got this nasty, beautiful wick. I said nasty, but if you're trying to get long, this is the kind of wick that oftentimes indicates a low. So you get a wick here, then you get a 3-wave pullback. Now I'd have to drill down and look at the internal structure of this to call it a wave 1. But remember, we're not trading this little 21-minute chart or an 8-minute chart or a 5-minute chart. We're swing trading. So we want to see a completed 5-wave up on a larger structure. So we would measure. If this is the low. Now, by the way, now I switched. I'm using the trend-based fib extension tool, which gives you 3 clicks. 1 click on the low, 2 clicks on the swing high, 3rd click on this low, and I'm going to drag it over because I'm going to watch how does price interact with these fib levels so I can help myself determine if it's 5 waves up or not. Because I promise you, I did the same thing over here, and none of these measured 5 waves to my liking. So this one is really interesting because it struck 1618. You got a pullback. Now, look, you got to keep in mind on the lower degree, on the lower time frames, just like with a candlestick chart, on the lower time frame, things are less reliable. But if this is the top of wave 3, I'm using my wave 4 template. If this is the top of wave 3, we would expect a pullback not to encroach upon the price territory of the top of wave 1. So at the moment, I would say, yeah, this looks like a wave 3 because it almost reached the 1618. And then you got a pullback that does not look impulsive. You could argue this is 3 waves, 1, 2, 3, kind of a double bottom with nothing but wicks. And then it made a new high. And look at that. It's giving you wicks. Even on this 21-minute chart, this high was a wick. This high is wicks. This is a wick. This low is a wick. This high of wave 1 is a wick. So this has me thinking, okay, wave 1, it has to be composed of 5 waves. Well, it certainly follows the rules for 5 waves, and the Fibonacci did not disappoint with the wave 3 almost making it to the 1618, wave 4 holding just below the 382, and then a new high for a 5th wave. And you can make yourself crazy if you want and get all down here and measure all this nano stuff. But remember, I'm just looking, is this reasonable to look for 5 waves? Is this wave 1? So remember, we're being patient. So we're still not in the trade. If you're looking for a swing trade using a 1 hour chart and the 4 hour chart, you got to be patient. So now we have what looks like a legitimate 5 waves up. So now we know that wave 2, now that this is already on here from we measured it before, wave 2 could be expected during a bull market in gold or silver to hold somewhere between the 382 and the 618. So this is what I have done in the other room. I'll put a buy and stay small. I'll put a buy order to 382. I'll put a bigger buy order at the 50% and the biggest buy order at the 618. And the stop goes below the low of wave 2 over here. So this is a bit of a mechanical way to trade Elliott wave, which Elliott wave is not a mechanical system. It requires a lot of subjectivity, a lot of judgment, a lot of discernment. It takes a lot of experience to do Elliott wave. So guess what? You don't have a lot of judgment yet. I mean, discernment because you don't have enough experience. Fine. Look at my charts. At least you're learning how to read an Elliott wave chart. Watch my charts. Follow along. Learn how to mimic Armando's charts first using his fib setups. Learn how to become like Armando first. Then learn how to do Elliott wave for your runner or for your swing trade. Armando's a king scalper. I'm becoming much better as a scalper, but now I'm letting my runners do the work without going so big with size. Armando got me to size down and take some gains. Scalp, take gains, develop consistency, use Elliott wave for your runners. Okay, so now that if you had put a buy order there, you would have bought it. You would have taken some heat. You wouldn't have gotten these other orders filled. But there's always another chance to add to your position because if this low held, I mean, it did hold, then now you're moving up and you're making higher highs and higher lows. Well, guess what? Buy some more. Buy some more on these. This is what they mean when they say buy the dips. You don't need to know about Elliott wave to buy the dips. You want to know about Elliott wave to know things like once this is created 5 up and then you get a 3-wave correction, once it breaks the high of that wave 1, your stop can go below this wave 2, just like the stop was below this wave 2 over here. But you can't do that if you're big. If you're too big, you're screwed. You can't have a stop where structure wants you to have a stop because you're too big. Man, I'm dropping all kinds of knowledge here for you guys. So this is where you were patient, right? You waited. You waited. Now let's go back. Now let's go back to the hourly chart, and you were patient and you waited for that 5. Now I left that 5 waves on there, but you can see how minute we're getting here because now it looks crowded with all those labels. I usually don't leave the labels on my 1 hour chart when it comes to this nano stuff. So this is where you're patient. You get 5 waves up. You get a 3-wave pullback that's somewhere between the 382 and the 618. And your stop is the wave 2, the nano wave 2. If you were lucky enough to get long here, now your target is the top of the next 5-wave move. So in that case, it should be another 1618. It should be another 1618 somewhere. Well, guess what? There it is. So it actually exceeded it a bit, but it tagged it and dropped the first time. Look at that. So had you been long, this is part of your rules-based trading. If you want to write this in your book, right? You waited for 5 up and 3 back to get long with your stop below the bottom of wave 2 of the previous degree. So now you hooked a fish and you want to add. So buy the dips. Leave your original position on there. Buy the dip. By the way, you might take some heat on your dips if you bought the dip too early, or maybe you missed it. Maybe you couldn't buy the dip and it made another high. Don't buy that. Wait for a pullback. Buy the dips. Add to positions. Okay? What you're looking for, if it's truly an impulse, and I already know gold is an impulse. That's why I'm looking for impulse. The same with silver. I already know it's an impulse. That's why I'm looking for impulses. That's when this really kicks in. That's when Elliott wave shines, is when you know you're in a standard wave impulse. So now you take your gains. If you went long at 26.59 and you did it the way I just described, you got over 100 points. You got over 100 points in gold, man. And it wasn't a scalp. It was a low maintenance. You can sleep at night. You don't have to stare at your screen because you know where to put the stops. You know where to go long. And if you happen to be on a screen, you see a dip, you buy it. Cool. Now that's going to raise your basis. So you still have to be paying very much attention to your risk. You just can't go, well, Brad said I buy the dip, so now I'm going to put on 5 times more of a position here than I had originally. No, don't do that. You'd figure out what your risk is. So anyway, now you have another 5-wave move. You just took it off and booked gains. So now you're looking for a wave 4. And this is where it gets a little tricky. Wave 4s are much harder to trade than wave 2s. Wave 2s are typically more straightforward. So now you have another 5-wave move. It hit the 1618, which is where you take your gains. If you're in the club, you know, you've heard me say this. I almost always take gains of any degree at the 1618. I mean, unless I've planned it in advance, like this is a swing trade and I'm shooting for something big. Because somewhere in here, there's a 1618. Sure, there is. Like somewhere in here, this is probably a 1, 2, 3. There's probably another 1618 inside of here somewhere. I know there is, but I don't want this video to be too long. So there, I just told you, be patient. Look for the 1, 2, take it off at the 1618. Now, what the game is wave 4 over or not? So to be patient, guess what? We're going to play the same game. If you want to be patient and you want to catch the 5th wave of gold and you want to be patient, just like there was 5 up over here and a pullback, we're going to look to see a 5-wave move develop. But first, we're going to get a tiny wave 1, which means a tiny 5-wave move up. 3-wave pullback we can buy. And your stop is going to be that low right there. That would be a loose stop. But if this gets 5 up and a wave 2, you're going to buy into those, the 382, this 50%, and the 618 fib of that pullback. You're going to layer into some longs. And then once it gets above the top of wherever that wave 1 is, that's where you're going to start buying the dips. Buy the dips if you want. Or you just put on your position and leave it alone. And just go do something else. And it's going to take a week or 2 for this to come up into here, very likely. Or, there you go. So let's speculate a little bit, okay? Let's speculate. Now I'm going to drop down. I'm telling you 1 hour time frame, right? But I got to drop down on this lower time frame to examine the structure. Because what I want to see before I go long, if I want to be patient, I want to see 5 up. This could be your 1, 2 right here. I'm now using the tool that gives me 3 clicks, fib extension tool. Click 1 goes at the low. Click 2. Is that 1 up? Could be. And then is this wave 2? Could be. So to see that initial 5-wave structure, we want to see something like this. This is if you're being really patient. 1, 2, something like this. Is it going to be exact? No, it's not going to be exact. Ooh, I do like the way this projects. I do like the way where this projects into, because this is a known zone for resistance. So wouldn't it be kind of cool if LA Wave suggests that price can come right up into the zone? Now you got to keep in mind, on a 21-minute chart on this nano basis is very unreliable. That's why you wait. Wait for 5 up. And then now I'm going to jump ahead here, and I'm not predicting this, okay? I'm just teaching here. I'm not predicting this. I'm teaching. Let's say that's where price topped. So now I'm going to grab my templates looking for 382, 50%, 618 in gray. And I'm going to drag this over because I like to try to keep my charts somewhat neat. I'm not predicting time either. I'm just teaching. So if this does 5 up, what you'd want to do is put a buy order at 382. Now let's just say this is a third of 1%. Then the next position may be 2/3 of 1%. And then this third position would be 1%. So your whole position, by the time, if price were to come all the way to the 618, you are now at 1.6% account risk. 1.6% account risk in this example. Now, if you're a scalper, what you can do also is if price comes up and gets above the level of wave one, go long and put your stop below the level of wave two. But you got to be small enough to put your stop. Brad, what are you saying? Are you saying I could buy at 27.36.8, 27.36.8, and put my stop at 27.25? That's a $12 stop. Well, that is what I'm saying. Yes. So you got to be small enough to do that. And by the way, look at where this retrace tagged 764. But this is a tiny nano. You have to keep in mind how freaking minute this is. Look how we're in here talking about this stuff like there's any consistency at that scale. But I'm doing this for context to show you how tiny it is we're talking about here. I mean, in terms of where this pullback was to the 764, even though I just told you a wave two, when gold's in a hurry, the pullback is going to be between the 382 and the 618 a great majority of the time, such is the case right here. But on this tiny little nano basis, it went to the 764. Well, that's what you get for trying to use Elliott wave on a tiny little nano 21 minute. Really, this should be on like an 8-minute chart to really see the structure. But, this is for a scalper. And for scalping, Elliott wave is just not anywhere near as important as the work Armando is doing for scalping. Does it have value? Yeah, absolutely. But I wouldn't just look at my chart and count on it. So this is going to be more reliable. This is going to be more reliable if this does something like this. Then what you can do is wherever this tops from, anywhere up in here, if it makes it to there and doesn't just keep going and starts getting some rejection, you can look to buy that retrace, okay, and layer into your longs. And it's up to you to decide how aggressive you want to be. If you can go tiny enough, go real tiny at the 382 from it. Once it gets, it has to get above the 1618. Even if it just pokes above it, it has to get above the 1618 in 5 waves. Like sometimes, now look, I know I'm talking a lot, man. I'm just giving you my stream of thought of this is what I think about when I'm doing my Elliott wave. Sometimes wave 3 can terminate shy of the 618, and this should be 5 waves. Wave 3 is composed of 5 waves. Wave 5 is composed of 5 waves. If we're talking about standard impulse, which we are, because we already know gold is behaving in a large 1-year long standard impulse. So the internal structure, I'm looking for standard impulses. I'm not looking for diagonals and 3-wave moves all over the place like I am in oil, because oil sucks and gold doesn't. I mean, I love gold. I love oil. But I'm just saying, look, I mean, gold, oil is some trash. Look at the 1-year chart of oil. It's trash. Look at the 1-year chart of gold. It's perfection. Trash. Perfection. I'm just being cute with it, having some fun, but that's really what's going on. So the point is, if you have a very large degree that's behaving as a true impulse, you can expect the internal price waves to behave more like a standard impulse, and that's what's happening. So, if this move only makes it to the 1382, but it does so, and you can see 5 waves, and then it pulls back, great. That could be a wave 4, and that is your clue to expect wave 5 to maybe be shallow. Maybe it only comes up to the 200 fib and doesn't exceed, like it's been extending so much lately. But this could be a 5-wave. So the point is, you just want to see 5 waves, and the clues are the internal wave should be 5 waves too. So, but once you get up into this region in 5 waves and it starts coming back down, that's when you want to start thinking about adding your longs based on these fibs and putting your stop below this wave 2 right here. So this is like a nano playing field that you don't want to trade if you're looking for a swing trade. You want a high probability entry. So you wait for 5 waves and you buy the retrace. Now, since I'm a scalper too, I already opened that can of worms. You can look to go long. And look, this is Armando. This is what Armando would probably say. Now, I don't want to speak for Armando, but I've been watching him for a year and study his charts. So I'm going to put his fib setup on my chart. 27.36.9. I'm going to drag this over 27.36.9. Isn't it interesting that my Elliott wave fibs are kind of lining up with Armando's fibs? I love that. And also, Armando, as you know, let me get rid of my little retrace. Oh, crap. I got rid of the wrong one. Let me get rid of my retrace. So, as you know, Armando loves the 618 to 886 zone, and that's where this little nano, as a scalper, this came right back into that zone and bounced. So, as a scalp, that's already worked. But as an extension, if let's see where this terminates, because Armando's fibs are lining up with the minimum for wave 3 in a non-diagonal, I think would be 1382. The minimum for a wave 3 in a non-diagonal structure, it would be reasonable to consider 1382 as a minimum fib. And if you're Armando and you're a scalper and you're trading his fibs, you know that these are extensions. So if you want to leave a runner on, if you scalped long, or maybe you're going to go long right now as a scalp, you're risking this much to try to grab at least this much. So it's not a terrible setup here, given how bullish overall gold is. And also, that actually I just realized something else. Man, I could just keep teaching and teaching, but you'll get some of this in the masterclass we're doing soon inside of the club for those who have signed up. But I want to show you something. Any wave 4, any wave 2 in a standard impulse should be composed of 3 waves. So as you know, I have a standard fib that I'm always looking for. Now I haven't done this until this moment, but if that's an A wave and then B, because all I'm trying to do is measure this in terms of 3 waves. And then I go turn on my template for where A equals C with extensions. Okay. They're always going to be yellow. And yeah, this just exceeded the 1, 2, 3, 6. So if this is a wave 4, if wave 4 is done, it should have done so in 3 waves, like so. Sorry. So A, B, C. And where the C should project somewhere between the 100 fib to the 1382 fib. That is a typical target area for a C wave. So it is possible that this is an ABC and wave 4 is done for gold. And we are now beginning the wave 1 of 5. We are looking for wave 1 of 5. Why? Because if we get the 5 up, you can buy the retrace with a little more confidence. Like if you go long right here, this could just crap out and come right down and make a new low and then build the next 5 up. Let me mention this. This is a good place to mention this. So every now and then, I take heat from a YouTube guy who goes, "Oh man, your method sucks because all you do is if you're wrong, you just move the labels and eventually you'll be right." Ha ha ha. Okay, have fun making fun of me. You can do that all you want. As long as you're not totally disrespectful, I'll leave the comments on there. Okay, because here is the truth about Elliott Wave. Here is the way you do it. You measure like I'm doing here. If this craps out and comes down and then bounces and starts looking impulsive again, I'm going to do it again. Because guess what? Markets are nonlinear complex systems. People that give me grief and throw eggs at me while I'm doing this, that just tells me they have no idea how markets work. They think I'm actually predicting something. Anybody that's putting stuff, we're not predicting stuff. We're giving you parameters so that you can take calculated risk. That's what we're doing. So if this fails and it comes down and makes a new low and then comes up again impulsively, I'm going to do the same thing again. I do this all day, every day. This is what I do because eventually you're going to get something that's higher confidence. And that's why I've been putting out analysis that's been incredibly valuable and useful for people that understand what they're looking at. So that's the deal. I'm going to do this game over and over. Trading is repetitive. And when you find something that works, you just keep doing it over and over again. It doesn't mean that it doesn't break and I'm wrong. I'm wrong all the time. I don't care about being wrong. It's good to know where you're wrong. And guess what? If this comes down and makes a new low here, I'm wrong. Well, it's great to know where you're wrong. These are called parameters. That's what parameters are. If you're the kind of person that only wants to share stuff that shows how smart you are and only show stuff where you're right, you're not going to make it. You have to humble and get real and be okay with being wrong because you're really not wrong. You're just using a method that has parameters. All right. I know I'm babbling now. I'm talking too much, but I hope I'm dropping value for you guys, man. Come on. So that's it. Look for the 5 up, buy the retrace. And now what I'm going to do, now that I've taught you all this stuff and showed you, and it's kind of wild, the price is kind of cooperating with what I'm saying. But what I'm going to do now is I'm going to delete all this stuff, including this. Just remember this black, red area of resistance. I'm going to go back to the 1 hour chart. I'm going to zoom back out again. I'm going to reorient this thing to get our context. Isn't it wild? All that mess that I was just talking about is just all of that knowledge and all of those measurements. And you could just see it with your own eyes, the efficacy of what I'm talking about here. All of that was inside of just a handful of candles. To me, that's remarkable because price is fractal, which one definition of fractal is self-similar at scale. So I just showed you nanoscale of price waves that have the potential to resemble a 1 year long price wave. You remember Men in Black, where the whole universe is inside of a tiny little ball on the collar of a cat. That movie is deep. There's a lot of movies that are deep like that reveal fractals without even knowing it. So that's a fractal. So anyway, blah, blah, blah. What we want to do is we want to wait to see if price can develop 5 waves up somewhere up into here. And when that happens, we're going to measure for a retrace and we're going to buy the 382, the 50%, and the 618. And the stop is going to go below. If this really is 1, 2, 3, 4, 5, the stop is going to go at 27, 25, 60 is where the stop is going to go. If this is the low and we get what I think is 5 up and it starts retracing, buy the 382, 50%, and 618 and put your stop at 27, 25, 60 in the December contract of gold futures. And the target is going to be minimum target. I think the minimum target is 28.15. Minimum target, 28.15. And then just remember, if that happens, 28.15 is somewhere in this perfect ratio. Where's 28.15? Actually, let me just put that on here as a placeholder because I don't measure the nano stuff on this daily chart. The chart would be a wreck, but I'm just going to put a line at 28.15 just as a reminder that is a reasonable target. Gosh, it doesn't need to be so fat. It could just be a little bit normal. Okay. This would be like crazy ideal target for this to terminate. And then maybe I'll start scalping gold to the short side for a change. That's the deal. By the way, guys, if you're getting massive value, you got to at least like the stuff, right? And then if you're new and you're watching this for the first time, you're like, whoa, I already know LA Wave, but now that I find a guy that's really into it and showing all these things and teaching, and you want to up your game, subscribe, hit the notification bell. So whenever I drop a video, you're going to know about it. All right. I appreciate you guys, man. It means a lot to me. I love Armando's club so much. Really, it's because of the community. It's because of Armando. He's created a club that is kind of a reflection of his mindset and his mentality. He doesn't take no mess coming there. People talking smack. You guys can talk smack to me on YouTube, whatever. But inside Armando's club, you got to come in there with the right mindset. If you're talking smack, you don't have the right mindset, you're out of there. We're there to learn how to trade, period. Hard stop. It's happening too. It's happening. I'm watching people come in. Some people, we know each other well. I know their pain, and I'm watching them turn the corner and succeed. And I think that's why I'm so turned on about this educational aspect of it, because I'm a teacher, literally. And so are my parents. I was raised by 2 teachers. So anyway, I'm here. Boom. Smash the like, subscribe, buy me a coffee. Hey, if you're finding all this value, I love it. You buy me a coffee, it just encourages me to keep doing this. It bolsters my spirits. It lets me know I'm on the right track. Cool. All right, guys. I hope you enjoyed this one. I'll see you on the next one. And for all you club guys, I will see you in the Professor Trades Club. Woo woo. Take good care. And whatever you do when you're trading futures, don't get killed. All right. Bye bye.